Welcome to the deep dive. Today we're looking at a really fascinating stack of technical white papers and architectural manuals from a platform called APS Accounting and Stock Control.
Yeah, it's a pretty incredible look at where the industry is actually heading.
Exactly. And our mission today is really to figure out how artificial intelligence is actively rewiring enterprise software, from inside out. But to start, I want you to imagine a scenario for a second.
Okay, let's hear it.
You're sitting at your desk, the quarter is closing, and you ask your company's brand new, highly advertised AI a critical, really time-sensitive financial question.
Right, the classic end of quarter panic.
Exactly. So you wait. The cursor blinks, and finally it spits out an answer. But here's the massive catch that the software company didn't actually tell you.
And it's a big one.
It is. By the time that AI actually finishes generating its response, the physical reality of your business operations has already completely changed. I mean, the data you're looking at is essentially a ghost.
It is it's a profoundly frustrating reality for anyone trying to run a dynamic business right now. I mean, we live in this era where we expect instant real-time intelligence,
Like,
right?
we want everything yesterday.
Exactly. But the underlying infrastructure of most enterprise software simply wasn't built to deliver it. When you look under the hood of most Western accounting platforms today, there's actually no native artificial intelligence built into the core system at all.
Wait, so if they're, slapping an AI-powered label on their website, what are they actually selling you?
Oh, the sources point out that these companies are all just rushing to advertise AI, but really it's just a passive chatbot bolted onto an outdated historical database.
A bolted-on chatbot. Okay, let's unpack the mechanics of that. Like, why does slapping an AI on top of an old system create such a bottleneck?
Think about the physical architecture.
Yeah.
What we often call an AI wrapper isn't actually part of the core software. It sits on the outside, separated by layers of code.
So it's completely separate.
Right. When you ask it a question, it can't just instantly know the answer. It has to physically scrape your old records. It reaches into the database through an API, pulls the historical data out, analyzes it, and then, attempts to format it for you.
Oh, I see. That definitely explains the latency. I mean, you have the delay of the data being entered in the first place, and then that's multiplied by the lag of the AI having to go fetch and process it.
Exactly. You're trying to make strategic decisions for today based on the financial reality of, like, last Tuesday.
Which is terrifying if you're trying to scale a company.
It is. And beyond the latency, there's actually a massive structural security flaw there, too.
Wait, really? Because of the API?
Yeah, because constantly exposing an ERP and enterprise resource planning system to an external scraping tool creates huge new vulnerabilities. You're repeatedly opening a backdoor to your most sensitive financial ledger just so a third-party application can, root around inside your records.
Wow. Yeah, if you're managing a company's finances, regularly opening a backdoor to your ledger it's a terrifying prospect.
Absolutely.
And I think this brings us to the APS approach outlined in the white papers, because they've abandoned that bolt-on model entirely in favor of what they call an active ledger architecture.
Right, the active ledger.
Yeah, so they hardwire the AI directly into the core framework of the software itself. And today, we're going to explore exactly how this works by examining the three layers of this active ledger. That's the data layer, the business logic layer, and the presentation layer.
And, the defining characteristic of this architecture is that these three layers execute simultaneously.
It's all at once.
All at once. There is zero delay between a physical action happening out in your operations and that action being reflected and analyzed in your financial ledger.
That's wild. Okay, well, let's start at the foundation, which is the data layer, because if the goal is to eliminate the latency caused by passive AI, the system obviously needs a completely new way to ingest raw operations and external documents.
Right.
And it has to do it in real time, completely bypassing that human data entry bottleneck.
Because you simply cannot achieve genuine financial intelligence if your data entry relies on someone sitting at a desk, manually transcribing crumpled invoices into a spreadsheet at the end of the month.
Yeah, the delay is literally built into the human element.
Exactly.
So one of the features designed to bypass that is this snap and post receipt scanner. I was reading the documentation on this, And the process seems remarkably frictionless. You just take a photo of a physical receipt with your phone.
Yep, just a quick snap.
But instead of just like saving a flat PDF attachment to some random file folder, the AI instantly extracts the vendor details, the dates, the total amounts, and even the individual line items.
It's pretty amazing.
It parses all of that and links it straight to the ledger.
Right, and you have to consider the mechanism at play here. It's not just doing basic optical character recognition or OCR, where a computer just blindly copies text. Exactly. It's utilizing contextual AI. So it actually understands that a string of numbers next to the word tax is a tax value, not a phone number or a zip code.
Oh, wow. So it actually knows what it's looking at.
It does. And it replaces the manual keying of data, which is, historically speaking, where the vast majority of accounting errors originate. I mean, a misplaced decimal point or a transposed number can throw off a ledger for weeks.
Oh, I've been there. It's the worst.
Right. By automating how information is gathered right at the point of origin, human typing errors are just eliminated before a transaction even reaches the official record.
Okay, I do need to push back on the practicality of that, though. Let's look at a real-world scenario.
Sure, lay it on me.
Imagine you're a warehouse manager. You're walking through a busy facility, your hands are literally full of inventory, and you're trying to check stock levels. You can't realistically stop, put the heavy boxes down, pull out your phone, try to snap a perfectly lit photo of an invoice, and start tapping on a tiny screen.
That's a very fair point.
The physical reality of the job just doesn't always allow for screen time.
And that is a very real limitation. But it's exactly where the hardwired nature of the AI becomes essential. APS integrated a voice wake word feature natively into the ERP.
Wait, like a smart speaker?
Exactly.
Yeah.
A user simply says the word APS out loud, and the application immediately starts listening.
So it operates just like the speaker you might have in your kitchen, but it's directly wired into your enterprise software.
Conceptually, yes. But the execution is far more complex because it has to navigate actual financial architecture.
Right. It's not just setting a cooking timer.
Exactly. You can move through system menus, pull up specific client records, or even dictate a complete ledger entry entirely hands-free.
Oh, wow.
Returning to your warehouse example, you could be carrying a box, spot a damaged item, and simply say APS log 3 units of damaged inventory for SKU U459.
And it just does it.
Just does it. The system parses the voice command, understands the inventory implication, and registers the action immediately across the entire database.
That is incredible. So that solves the physical barrier to entry. But what about geographical and linguistic barriers? Because if you are a listener managing a modern team, your operations are likely global.
There, sure.
You might have your headquarters in the USA, a logistics hub in Germany, and a major distribution center in Spain or the Middle East. Language barriers usually force companies to maintain completely separate localized databases.
Which creates a massive fragmentation problem. I mean, if you've ever lost an entire weekend trying to manually consolidate a German subsidiary's ledger with your U.S. master file,
Oh, man.
you know exactly why language barriers cause data duplication and reporting nightmares.
So how does the APS data layer solve that specific nightmare?
It uses a bilingual architecture by default. It's built to serve both the Western market and the Arab market natively. The mechanism relies on a centralized mathematical spine.
Centralized mathematical spine. Help me visualize that.
Sure. When data is inputted, whether by voice, scanner, or typing, the system stores the core numerical truth as a single universal data point.
Wait, so how do a team in Chicago and a team in Dubai interact with that single data point?
Well, the English or Arabic interfaces are essentially dynamic skins rendered over that mathematical spine based on the user's login preferences.
Oh, I see.
Yes, so a single input populates dual records simultaneously. A user in the US views the transaction categorized in English, while a user in the Middle East looks at the exact same transaction categorized in Arabic without ever having to reload the page.
That's seamless.
It really is. They're sharing the exact same database without ever duplicating the underlying numerical data.
Okay, so the system has effortlessly ingested all this raw data. It's taken receipts, parsed voice commands, bypassed human error, and rendered it all bilingually.
Yeah.
But, raw data is totally useless on its own. Like a photo of a receipt doesn't know what tax bracket it belongs in or how it impacts quarterly projections.
Exactly, it's just noise.
So how does the system make sense of the noise without a human accountant stepping in to organize it?
This is where we move up into the second tier, the business logic layer. Think of this as the active brain of the system.
The active brains.
Yeah, this is where all that raw information is categorized, analyzed, and most importantly, enforced against strict financial compliance rules.
And I think the standout feature here is the AI chart of accounts auto builder. Because usually setting up a chart of accounts requires like deep accounting knowledge to ensure the structural hierarchy is perfect.
It's extremely tedious.
All right. But the manual explains that with APS, you just describe a new business account in plain natural language. Like you just type or say, we bought a new delivery van, and the system interprets your intent.
It automatically creates the correct account type, assigns the numerical code, determines the parent account, and generates the name.
But hold on. If I just vaguely say, we bought a van, how does it actually know to classify that as a depreciating capital asset rather than a standard operational expense, like, I don't know, office supplies?
That's a great question.
Isn't it incredibly risky to let an algorithm automatically build the structural legal hierarchy of your finances based on a casual prompt? I mean, I've seen AI hallucinate entirely fake information.
And that is a critical distinction to make. If we were talking about an open-ended internet scraping chatbot, that would be incredibly dangerous. But remember, this AI is native to the logic layer.
Right, it's hardwired.
Exactly. It operates within a closed, highly regulated mathematical environment. It isn't just guessing words. It's hardwired to adhere to GAAP and IFRS standards.
Okay, and for listeners who might not live and breathe accounting acronyms, GAAP is generally accepted accounting principles in the U.S., and IFRS is the International Financial Reporting Standard.
Right. These are the strict rule books of corporate accounting.
Got it.
So the AI has those exact rule books embedded in its core logic.
Yeah.
When you say, we bought a van, the AI cross-references the cost, the vendor, and the asset class against those GAAP rules.
Okay, so it knows what a van is legally.
Yes. It understands that a vehicle requires a depreciation schedule, so it actively prevents you from simply expensing it as a minor purchase. It puts these heavy structural guardrails around the AI, so it physically cannot invent an account category that violates double-entry bookkeeping laws.
That's incredibly smart.
Yeah.
But that adherence to the rules must be wildly complex when dealing with global tax compliance. Because doing payroll or managing taxes in Texas is fundamentally different from doing it in London or Berlin.
It's entirely different, which is exactly why the logic layer recalculates variables on the fly for specific regional mandates.
Wow.
Yeah, the system automatically handles calculating FICA, the Federal Insurance Contributions Act taxes in the U.S., alongside PAYE, or pay-as-you-earn, in the U.K.
And does all of that natively?
Natively. It also manages specific tax brackets for Germany and Spain.
I actually noticed how the interface handles those international complexities, and it's brilliant. Instead of forcing administrators to dig through endless drop-down menus or, write custom formulas just to update a new statutory rate for Spanish social insurance.
Right, which is how it's usually done.
Exactly. APS uses interactive visual sliders. An administrator literally just adjusts a gradient-filled slider to update a tax rate. It makes visualizing and managing compliance across multiple countries incredibly intuitive.
It abstracts all the complexity of international tax law into this simple visual interface, while the logic layer handles all the heavy mathematical lifting underneath. But, the feature that truly demonstrates the power of this layer is the 90-day AI cash flow forecast.
Oh, yes. This feature completely shifts how a business operates.
It really does.
From what I read, the AI reads your last 12 months of historical ledger data, and it automatically projects your expected cash inflows, your outflows, and your net position 30, 60, and 90 days into the future.
And it does this with absolutely zero spreadsheets required.
Which is music to my ears. But how is it predicting the future without just making wild guesses?
Well, it relies on pattern recognition within your historical data. It looks at your accounts receivable and accounts payable aging cycles. So, for example, it doesn't just see that a client owes you $10,000 on net 30 terms.
Okay.
The AI sees that historically, this specific client always pays 14 days late.
Oh, wow. So it knows their habits.
Exactly. It adjusts your projected cash inflow based on that behavioral reality, not just the technical invoice due date. It factors in recurring billing, seasonal sales dips, and upcoming scheduled expenses to calculate a highly probable future reality.
That analogy of steering a ship is perfect here, because traditionally, business leaders operate by looking at a profit and loss statement from last quarter. You're trying to steer a massive ship by looking exclusively at the wake trailing behind you.
It's entirely reactive. You're making decisions based on where you've been.
But with these 90-day models, you suddenly have radar. And because the ledger is active, these models aren't static.
Right, right. They auto-update continuously as new data hits the system.
So you know exactly where your cash will be 3 months from now. You stop guessing and you actually start planning. Like, you know definitively if you have the cash reserves to hire that new engineering team in Germany, or if you need to, say, delay purchasing equipment for your facility in Spain.
It provides immense strategic confidence.
Yeah.
But, it also raises a massive security question.
I was just thinking that.
Yeah, because we've established that the system is instantly gathering data from anywhere in the world, and it's autonomously analyzing the most sensitive operational metrics a company has. We're talking about payroll data, profit margins, supplier contracts, future cash vulnerabilities.
Right. When you have an entire multinational team logging into a system with that much sensitive data, how do you prevent absolute chaos?
Exactly. And this brings us to the top tier of the architecture, the presentation layer.
The presentation layer. Okay.
This is the secure command center. It's where human users actually view, interact with, and extract insights from the system. The fundamental principle here is least privilege access ensuring. People only see exactly what they need to do their specific jobs and absolutely nothing more.
Got it. And the first line of defense they mention in the documents is menu security. It basically allows administrators to visually configure the interface for every single employee.
Right. It's really customized.
Yeah, so you can completely hide sensitive modules. If someone is working the floor in the warehouse scanning inventory, you can configure their view so the HR and payroll sections don't even exist on their screen. The buttons simply aren't there.
It's a vital internal control. But internal employees are only half the security equation.
Which brings up a real headache for anyone listening who has gone through tax season or, a major financial audit. When you have to let third-party external auditors into your ERP, it is frankly terrifying.
Just the worst.
The standard industry practice of creating a temporary login just feels like handing the keys to your house to a stranger and hoping they don't snoop in your medicine cabinet.
Or worse, they make a copy of the spare key, and you forget to ask for it back. Lingering access is a massive vulnerability.
Oh, for sure.
I mean, a company creates a login for an external consultant, the project ends in March, and 3 years later, that login is still active, functioning as an open backdoor just waiting to be compromised by a bad actor.
So how does the APS presentation layer solve that spare key vulnerability?
They utilize what's called shared workspace access control. Administrators securely invite external auditors or colleagues into a specific workspace, but they do it with strict, predefined boundaries. The critical mechanism is an automatic expiration protocol.
So you're putting a hard timer on their access.
Exactly, but it goes much deeper than just resetting a password when the timer hits 0. Think of it like a self-destructing bridge.
A self-destructing bridge.
Yeah, you build a temporary digital bridge for the auditor to walk into your system. When their designated time is up, say, 30 days, the system physically severs that specific database connection. The bridge collapses.
Wow.
It isn't just a revoked permission sitting in a user directory. The actual access pathway is destroyed.
So there are no forgotten passwords and no lingering access vulnerabilities left behind. Once the audit is over, the door literally physically ceases to exist.
Exactly.
That gives an administrator total peace of mind. Now, assuming the data is perfectly secure, we need to talk about getting insights out of the system. We've covered putting data in and analyzing it in the background, but how does a manager actually extract actionable intelligence?
This is where the AI report builder fundamentally changes the speed of business. Because the AI is hardwired into that verified, gap-compliant logic layer below it, the reporting process becomes dynamic and instant.
Let's look at the traditional SQL bottleneck for context. Usually, if you want a complex report, let's say you ask, show me the profit margins for our UK operations compared to our German operations over the last 3 quarters, filtering out any capital expenditures.
Right. A very standard executive question.
But you can't just click a button to get that.
Yeah.
You need a data analyst who knows SQL to write a custom query, pull the raw data, clean it up, and format it into a chart.
Which introduces latency all over again. You have a burning strategic question on Monday morning, but you have to submit an IT ticket and wait 3 days for the data team to build the custom report.
And by Thursday, the opportunity might have already passed.
Exactly. But with the AI report builder, you bypass the IP department entirely. You just ask that multivariable question in plain natural language.
Wait, you just ask it?
You type or speak it exactly as you just said it. And because the AI understands your intent and has native pre-verified access to the continuous flow of data, It generates a mathematically verified financial report in seconds.
That is game-changing.
It democratizes data analysis across the entire organization. You do not need to know a single line of SQL to understand the complex mathematical reality of your ledger.
Wow.
The presentation layer functions as a secure intelligence engine. It protects your records with those strict, self-destructing access controls, but it gives your leadership team the absolute clarity needed to propel the enterprise forward immediately.
It truly is a complete paradigm shift. Okay, well, let's summarize the ground we've covered today, because APS Accounting and Stock Control has essentially reimagined what enterprise software should be doing for business.
They really have.
They've taken the financial ledger from being a passive historical record where you're just looking at ghosts of your past operations and turned it into a real-time active intelligence engine.
And we traced the flow of that active intelligence from the very beginning. We saw frictionless ingestion at the data layer, using voice commands and contextual receipt scanners to completely bypass human error.
Right. And we explored the bilingual mathematical spine that allows global teams to share a single truth, whether they're looking at it in English or Arabic.
Then we moved up to the logic layer, where the AI auto builder strictly enforces GAAP and IFRS compliance, managing tax brackets seamlessly across the USA, UK, Germany, and Spain.
Yeah, the sliders. And we saw how it uses historical aging data to accurately predict your cash flow 90 days out, no spreadsheets required.
And finally, at the presentation layer, we examined how the system secures your most vital data with least privilege menus and auto-expiring auditor access, while empowering managers to pull complex, plain language reports without knowing any SQL.
It's basically designed to give you total clarity and total security. So for you listening, whether you're managing a local office or trying to securely consolidate data across a remote multinational team, you can actually transform how you manage your business right now.
Highly recommend checking it out.
Absolutely. You can start a 15-day free web trial, and this requires no credit card upfront, by the way, by heading over to their website at appsoft.org. That's APSSOFT.org. You can also reach out to their team directly via email at sales@appsoft.org, or even shoot them a message on WhatsApp at 00001930341901.
You know, as we wrap up, I want to leave you with something to ponder.
Oh, I love a good final thought.
When we look at the broader implications of this technology, a really fascinating question emerges. If your accounting software can now instantly ingest raw physical data, automatically categorize it into a legally compliant chart of accounts, and accurately predict your cash flow 3 months into the future,
Right.
does the fundamental role of the human accountant shift entirely?
Oh, wow. That is a massive existential question for the industry. I mean, if the software is doing all the math, what is the human actually doing?
Precisely. Are we moving away from an era of record keepers, professionals who spend their entire careers just documenting and reconciling what has already happened, and entering an era where financial professionals function purely as strategic futurists?
Futurists, I like that.
Right. When the machine handles the history perfectly, human expertise is suddenly freed up to focus entirely on navigating the future.
It's a profound shift in how we value financial expertise, and it is definitely something to think about the next time you open a static manual spreadsheet and realize you're just looking at the ghost of your finances. Thanks for joining us on this deep dive.